You've got Trump, you've got trade, you've got oil, you've got global politics, you've got all stuff. To you, what is the one or two most important things for our viewers and their money this week?
Well, Sully, it is a new week. It's a new quarter. We're really excited. Obviously, it was a pretty rough 6 months, but I think this week we are really focused on this trade tariff conversation. And why are we so focused? Even though it's only $34 billion we're talking about on Friday, July 6th, of being imposed on Chinese names, or products, I should say. Well, it's the idea it could morph, right? It's all this posturing and positioning. Kind of the way we walk into an old country buffet, Sully. There's a lot of different ways we can attack this. And I think right now, if you look at 2017, we were at a trade deficit. The United States was at a trade deficit, $552 billion. By and large, 60% of that was China. So this rhetoric that we're talking about is happening this week. There's going to be more fireworks just on the 4th of July.
The biggest asset class gain in the last month, though, has actually been all the volatility of the VIX. I'm not a big fan of the VIX as a fear gauge anymore, but people are buying and selling it like it's its own instrument. That's up 17%. If you don't know what's going to happen, Jeff, is buying volatility the best way to hedge your bets, literally?
No, but I think you really have to rewind for a second to understand the VIX right now. It just went over 17. It's back around 16.5 this morning in the spot price. What does that mean? A 16 VIX, Sully, all that means is the expectations of an S&P realized move of what that market will actually do is only going up or down 1%. So there's no fear really in the market. If we see a 32 VIX, now we're talking a little bit of anxiety and fear in the market as we expect 2% move up or down. But I think right now it's an opportunity to hedge portfolios or even rotate. And I think if you look at some of the beat up sectors, we look internationally. Some of these international ETFs we like to look at, they really had a hard 6 months to start 2018.
Rotate
I think
from
those pick
what
up.
Into what? I know there's been some rotation into utilities, which makes me nervous that people are getting so safe with their money.
Well, I'm going to be the contrarian here. What have we seen a rotation into? It's been tech. Look at the NASDAQ 100. Just a sensational year yet again after a phenomenal 2017. So I think if you have tech exposure in some of these big FANG names, these FANG names, I know we talked about it earlier here on Worldwide Exchange, but they have attracted and allured global assets. Whenever you see a sell-off over in Asia or in Europe, you see them come and buy a tech name. So I think if you have an over-allocation or a high tilt in your portfolio to tech names, I think it's time to trim those names and look at some of the financials. I know Goldman Sachs has had a really rough year, but if you see volatility pick up the way we anticipate for the back half of the year, they're going to profit from all the trading that they typically do so well at.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.